Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 8th of December, 2018, and we're providing our gold and silver weekly update for the week ending the 7th of December. Gold rose $26 last week from $1,222 to $1,248, having hit a high of $1,250 and a low of $1,221. In sterling terms, gold finished the week at £980, up £22, and in euros it closed at €1,096. That's up €17 on the week. Silver rose 45 cents, from $14.17 to $14.62, having hit a high of $14.66 and a low of $14.17. In sterling terms, it closed at £11.48, that's up 37 pence, and in euros it closed at €12.84, that's up 0.32 euros. The gold to silver ratio fell from 86.2 to 1 to 85.3 to 1. The Dow Jones closed on Friday at 24,388, down 558 points on the day and down 1,150 points on the week. And the NASDAQ closed at 9,669, down 219 points on the day and down 361 points on the week. And the S&P 500 closed at 2,633, down 62 points on the day and down 127 points on the week. Brent crude rose $2.21 from $59.46 to $61.67, and US light crude rose $1.68 from $50.93 to $52.61. The dollar index stands at 96.51, that's down 0.76 on the week. We ended last week's summary with the words, quote, "So next week we should see some movement in the stock market, the dollar, and gold and silver prices," end quote, and emphasized that the important economic data would be out on Friday. Well, if we look at the gold charts, we could see that gold gathered some momentum at the beginning of last week, maintaining a holding level midweek and then rising again, particularly on Friday. Why was this, we hear you ask? Well, first of all, early in the week, it became clear that the so-called trade deal with China was anything but. In our video last Sunday, we stated it was merely an agreement to delay tariffs, so negotiations could take place. President Trump made it out to be much more than that, and when the reality set in, it became clear the president had no clothes on this issue, and fears began to set in, together with initial early economic data concerns that the US economy was not as robust as many had thought that it was. This was certainly then confirmed on Friday, as there was a smaller than expected non-farm payrolls report announced. Anticipated were 190 to 200,000 new jobs, whereas the reality was 155,000. And to add wood to the fire, the October jobs report, which accounted for 250,000 new jobs, was downgraded to 237,000. Average hourly earnings rose by 0.2% against an envisaged 0.3%. And on Thursday, the trade deficit figures showed a deficit of $55.5 billion against an expected $55.1 billion. These figures do matter. We hear so many people say, ignore the figures, they're all made up anyway. The reality is, and we have said this often, whereas they may not accurately reflect the precise reality, it's the trend that you have to observe. And clearly these figures, though not necessarily terrible, were disappointing. Disappointing enough for traders to sell dollars, for markets to fall, and commodity prices to rise because of the dollar's relative weakness. So we have gold rising above the October highs of 1244, and is knocking on the door of the 50-day moving average of 1257. And the MACD, the moving average convergence divergence, is pointing towards accelerated positive momentum. The COT report shows that producer merchants have opened twice as many short contracts than longs. Swap dealers have 50% more longs than shorts, and manage money almost twice as many shorts than longs. Silver followed a similar, though not identical, pattern, but rising again on Friday near to its weekly highs. It, like gold, and as we again have mentioned a number of times, is operating within approximately a $1 high-low band. We did say earlier in the week that it may gravitate towards $15, as gold would gravitate towards $1,300. We did not think either of them would quite get there. We shall obviously have to wait and see. The COT report on silver shows producer merchants holding twice as many shorts, swap dealers adding a little to their long positions, with longs to shorts being 4-3, and managed money almost twice as many shorts than longs, with their positions little changed. Virtually all analysts agree that currently both gold and silver are dollar plays, and especially silver at this stage, as there is no apparent pickup in industrial demand. The question is, what is likely to happen over the next couple of weeks? So let's take a look at the economic news to be announced this coming week. On Tuesday, we have November's Producer Price Index. On Wednesday, Consumer Price Index, Core CPI, and the federal budget announcement, all for November. Thursday, we have the Import Price Index, and on Friday, retail sales and industrial production for November. So Wednesday and Friday are the two important days to note. So we have to ask ourselves, since the dollar is the important determinant on gold and silver prices, what are the influences that are likely to bear upon it? Well, we have to take into account a rather dovish tone from the Fed on interest rates, lower than envisaged new jobs created, lower core inflation than predicted, and worries over domestic and international trade levels. Add to the mix possible increasing upset with China and the holding of Meng Wanzhou of Huawei by Canada on behalf of the United States, with China threatening retaliation, and further revelations of the Mueller probe. None of this auguring very well for stability and confidence. So we can see gold and silver continuing to rise a little short term, but are of the opinion that we're still operating within this relatively tight band of $1 for silver and $100 for gold. All of which to some degree will be sorted on the 19th of December, when we shall see what the Fed decides to do about interest rates. Now for some inner sanctum housekeeping. We would like to thank everyone who attended our webinar last Saturday, a copy of which can be found in the inner sanctum on our website under Webinar Archive, for those who wish to listen to it and weren't able to attend. There were a few technical glitches at the start, so we suggest you listen to it beginning at minute 4. We have interviewed Mr. Canning of the Taxpayers Alliance, and that will be published on Monday. And also have a wonderful interview planned for the end of January, beginning of February, with BBC presenter Robin Page, who was the main star of a much-loved TV serial entitled One Man and His Dog, and is an author of around 40 books. He shall be speaking about the truth behind climate change and the environment, and we shall be touching on issues relating to the media and whether institutions like the BBC really are politically biased, as many claim, and if so, in what way? It's an interesting insight from an insider. There is also an additional section being created on the website about MRSA and how nanosilver has been used to treat it, and in over 2,000 cases that we know of, has been successful in doing so. We shall be interviewing the person who has actually recommended this product and share his thoughts as to why medical practitioners have not truly embraced it. So we have much to look forward to ahead of us, plus our take on JP Morgan, its silver acquisition, and what we believe they're really up to. All this in the Inner Sanctum. And part 2 of the JP Morgan series will also be published on Monday. Meanwhile, have a great weekend. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.